The main objective of GAFIS has been to support financial institutions in developing and delivering savings products that are sustainable, useful, and truly accessible to the poor. GAFIS has engaged 5 leading banks in this effort: Bancolombia in Colombia, Bansefi in Mexico, Equity Bank of Kenya, ICICI Bank in India, Standard Bank of South Africa. In launching GAFIS, we wanted to find ways of helping these particular banks to improve their delivery of savings products to the poor, and to do so effectively, sustainably, and at a significant scale.
During the 3 years of the project, the GAFIS banks launched 3 brand new savings-related products and revamped others relevant to their context.
All the GAFIS banks focused resources and energy on rolling out agents for the purpose of opening accounts, taking deposits, and allowing withdrawals. As a result, collectively, they now have 10 times more agents than they had at the start of the project. And to put that in perspective, that's 5 times more agents than physical branches. Together, the GAFIS banks opened 4 million new accounts linked to the project. Clients used 1 million of those accounts for savings, and 550,000 of them were poor by national standards.
This kind of project is exactly the kind of thing that justifies the kind of philanthropic capital that the Bill and Melinda Gates Foundation provides. One of the things I'm most excited about is to see how the GAFIS banks have shifted the way they think about financial inclusion, all the way up to the top of the banks, and putting the customer at the center.
The experience of GAFIS highlights how large banks can innovate and change to address the challenge of financial inclusion of low balance accounts on a sustainable basis.
Good morning, everyone. My name is David Porteous from a Boston-based consulting firm called BFA that served as the project managers of the Gateway to Financial Innovations for Savings project, known as GAFIS, which, as you just heard, was financed by the Bill and Melinda Gates Foundation. Now, the title of the session is drawn from what you may have seen on the way in if you collected the report, Big Banks and Small Savers, because the essence of the project was working with a selected group of large banks, banks which are large by any standards in retail markets around the world, and grappling with them on how they serve small savers, low balance account holders, as part of their financial inclusion strategies. So I'm delighted that with me on the platform this morning are senior representatives from 4 of the private banks that took part in GAFIS, and I'd like to introduce each to you in turn. So on my right is Santiago Perez, who is the Group Vice President of Retail Banking for the whole Bancolombia Group. Bancolombia is the largest retail bank in Colombia today. Next to him is John Staley, who is the CFO and Executive Director of Equity Bank in Kenya. And Equity Bank has become, in recent years, the largest retail bank measured by customers in Kenya today. Next to him is Abhijit Saha, who is the General Manager of Rural and Inclusive Banking at ICICI Bank, which is India's largest private bank. And then at the end of the row, Kabelo Makeke, who is the Head of Inclusive Banking in Standard Bank of South Africa, again, one of the largest retail banks in South Africa and part of the Stanbic Group that works in other markets in Africa. So as we start the panel this morning, I'd like to just sketch for you a few of the themes which come out in the report, and I think will come out in our discussions this morning, that were part of what we came to call the GAFIS journey. It was a journey because none of these banks claim, and they don't claim today, that there's any quick or easy answer. But there's been an incremental process of fairly radical innovation across the board, starting with understanding the consumer experience. How do low-income people in these countries save? What does savings mean, and how do banks compete for that, accepting that for many people, bank savings accounts are just not great products, especially at the low end of the market? Well, it turns out that they're not great for customers, but also not great for banks. So the business case often of low-value savings is problematical. And these banks had to wrestle with the business case. What do you do with an account which may lose money measured on its own? How does that fit into a sustainable inclusion strategy for a large market-listed bank, as all of these are here? Well, it turned out, thirdly, that one of the key responses to that was to develop new, lower-cost channels for servicing clients. And so in each of these banks, there's been a profound revolution, almost, I would say, in their channels. 4 years ago, very few of them had many active agents, places at which customers could transact outside of bank branches or ATMs. Today, as you heard on the video, they all have 5 times, collectively, 5 times more agents than they have branches, and for some of them, many times that ratio. Not only about agents as a channel, but also mobile as a channel. All of them have had different struggles with a mobile channel, which has become front and center of their customer strategy going forward, and we'll pick up on some of those themes. And then lastly, you can imagine these are large, complex organizations. The processes of change within them are never easy at the best of times, and to a greater or lesser extent, they've all been through profound institutional shifts in the way that their inclusion units fit into the bank, what comprises that unit, who they report to, how they're resourced, and so on. And so I hope that elements of those themes will come out in our discussion this morning. But I'd like to turn first, Santiago, to you and to ask you, so I've mentioned this mobile theme. So in Colombia, as you came to think of the low-income segment that you service, what proportion of your customers today there have a mobile phone?
Well, all of them, David, all of them.
The entire segment today?
Yes. In Colombia, there are more cell phones than people.
And that's a story I think we'll hear in other markets increasingly as well. So how does that feature into the mobile product that you developed called Ahorro a la Mano as one of the 3 new products that were launched during the GAFES period?
Well, as a matter of fact, our plan was, we didn't have a plan. We just wanted to, according to the project, to look how to have a savings account for poor people. And so we didn't decide the product. We asked the customers, or better, the would-be customers, to design it. And the outcome was that them found a new product. The name of the product is Ahorro a la Mano, Savings at Hand. And this product is completely based on a cell phone. It's very simple on the outside and very complex in the inside.
But it's a cell phone only, no card?
No card, no paper, no savings book, nothing. Just the information about the ID of the person and the cell phone. They don't have to go to a branch to open it. They go to the cell phone, and there is an option called My Banks. They go to My Banks, and there is an option called Ahorro a la Mano. There are instructions, very simple instructions, on how to open the product. It takes about 6 or 7 minutes.
So it's easy and convenient for the customers to launch?
It's easy, it's convenient, but sometimes they require some help. And here comes the agent. And the person opened the account. We make some verifications online. The account is open. The cash in can be done through the agents and transfers, for instance, government payments, company payments. And the cash out is done through agents, through transfers, and also through ATMs.
But without a card?
So without a card. The phone gives a temporary PIN code, and the person can go to an ATM in the next half an hour and withdraw money.
Right.
And Well, so far we are very happy with the product. We love the product. And it has been a revolution inside the bank. We are a large bank, as you said. We are very complex with a lot of paradigms. And here we have to break a lot of paradigms.
So this mobile-only was one of those. This is the first mobile-only
Yes, for
product.
instance, in my country, there was no legislation for it. So we had to go to the regulators and explain it, and they say, oh, this is crazy. And after a lot of lobby, they discovered that that wasn't crazy. And so they created a special category for us. Now we have 2 competitors. That's good.
So imitation is the
and a special category which is called a simplified savings account. And also people in the bank, the audit, the compliance people, they were very, very scared with the product. And well, at the beginning we have some frauds, and we already control the frauds. There is not a fraud problem any longer. And well, it has been a success.
And how do you measure that? So give us some numbers, Santiago. A year and a half later?
A year and a half later, we have almost 250,000 accounts. The average account balance is about $32, $33. And we have discovered that creating communities or serving communities is a very good way to sell the product, because the community help us. I mean, for instance, the largest cooperative of taxi drivers in the country, 40,000 of them, now got the product. And we discovered, by the way, we didn't know that that product could convert the cell phone in a POS.
Yes.
So people are now paying with debit or credit cards, even with Ahorro a la Mano accounts,
onto that product,
to the taxi drivers with the product. And it's very good because there are no intermediaries between the customer and the taxi driver.
Yes, I'd love to come back to that in a moment if we may. That's helpful. So that's one of the GAFIS products launched. I'd like to go to Abhijit Saha next. So Abhijit, I'm sure many people in the audience have followed some of the fairly dramatic news out of India, where your Prime Minister announced financial inclusion as a top national priority of the entire government and set this incredible target, 100 million new accounts within the next 6 months or something like that. How does a bank like ICICI, as a private bank, respond to that challenge?
Thanks, David. I would like to thank also SWIFT for organizing this panel discussion. I would like to personally thank Gate Foundation for giving us this opportunity to be part of the GAFIS project. Coming back to this Prime Minister mission, I think PMJDY, Prime Minister Jan Dhan Yojana, is a mission statement which our Prime Minister has launched in August. And the objective is to cover 100% of Indian households under the banking facilities.
So this is full financial inclusion.
Full 100% financial inclusion of the Indian households. So there are around 100 million households which are yet to be covered out of 250 billion which we have. So those 100 million, the target is to cover by January 2015. So 4 months from now, we'll be...
4 months from now.
4 months from now, we'll be having 100 million accounts to be open.
And how many more do you expect to have as ICICI?
David, ICICI is one of the largest bank on financial inclusion in India today. We already have around 18 million customers on financial inclusion. So we always participate with the government to build up the growth story for India. And in PMJDY, we are planning to have around 12,000 villages which needs to be covered, which works out to around 6,000 sub-service areas. So that would mean we have to cover around 2 million of households in 4 months' time.
So from 18 million customers to 20 million in the next 4 months is what you have on your target.
That's
wow.
the target.
That's a tall order.
Yeah.
Well, so that's the future. Let's talk a little bit about the past, Abhijit. So under the GAFIS program, you developed a new product called Apna Savings Account. Just describe briefly the features of that account and why they were novel in the Indian context.
Yeah, David, 3.5 years back when we started GAFIS project, there were two questions which were bothering us. One is on how we can make financial inclusion accounts more active. That means they are more transacting in nature. And the second question which was bothering us was how we can make financial inclusion business sustainable, self-sustainable. So Apna Savings is basically a product which got developed with these two thought processes in place. The features are, there are 4 different features which we have used. One is, this is basically on a mobile platform without using any service provider, I mean, without any tie-up with a service provider per se.
So it's also a mobile platform and in the hands of the clients as well?
Yes. So it's a mobile platform independent of service provider. And the second is we made it complete paperless and simplistic process, and the customer can access the account as and when they need. That is the second feature. And the third one is more critical. We said that this model is going to have more relationship-based, so the touch points are higher. So every week, the customer gets met by the customer service agent. Mm-hmm. And the fourth, which we have put in, which was a very, very bold decision for us, to make these accounts as chargeable accounts. So these accounts, when customers were opening the accounts, they were charged. And for maintenance of these accounts, they are also charged.
Which is a big difference from the no-frills accounts in India today, which are free, right,
yeah,
in general to the customer.
Yes, David. So that's why, I mean, this particular set of accounts are completely different from all the financial inclusion accounts which we have opened, which are absolutely free.
Right.
But surprisingly, David, surprisingly, if you look at it, the result is quite surprising. One is we are in 133 villages today. We are present for this particular project. And all these villages, we are around 70% of the customers are covered in these villages. And they have proactively come and opened the account. We didn't have to force them.
There's no drive, as
yes,
can happen with
in
G2P.
spite of, David, in spite of these accounts being charged, they have come proactively and opened the account. Mm-hmm. And the second important findings for us is these accounts has got 80% of the customers active and a higher amount of deposit balances in these accounts compared to our free accounts.
Right.
Okay.
So that's a significant number in the Indian context where the levels of activity on no frills are often close to zero in accounts. Here you're getting 70%.
Yeah, for our normal financial inclusion accounts, it varies between 40 to 45%. But this one is at 80%, which is substantially higher.
Right.
And so that leads to us on trying to understand the psyche of poor people. We realized, David, that poor people, they are though cost sensitive but not price sensitive.
Right.
If you can put a right value proposition in front of them, they are ready to pay the price. And the second realization which we had is poor requires more planning than any rich person. So they require to plan. The difference between rich and the poor is a rich person would require to plan for the money which he has in his hand.
Right.
But a poor has to plan for the money which he doesn't have in his hand.
So they have to be more active financial managers.
Yes.
Yes. Indeed.
So a relationship model actually gives them a lot of confidence on trying to use those savings accounts.
That's helpful, Abhijit. So we'll come back to the relationship model. I'd like to go to Kabelo, though. Kabelo, to understand, so Standard Bank, tell us your customer base. You have 7 million customers in the inclusive segment that you manage. How many of those have mobile phones? And how important is that to your strategy of dealing with them?
Yeah, so thanks, David. We have around 7 million customers, but within South Africa, which is similar to what we just had, most customers actually do have cell phones. We also have more cell phones than people within the country. But I think what we found is that the actual adoption of cell phone usage is actually quite low. We're sitting at less than 10% within our base in terms of mobile phone usage when it comes to banking products. I think for us it means that we actually need to drive more the awareness and the education in terms of getting the customers to adopt this channel, because from our perspective, we see this channel as the most efficient one that we can use to get the cost to serve this customer base to be low.
So you can touch them all, like Bancolombia can, and ICI has mentioned that as well, but getting the customer to transact on that platform remains a challenge which you're dealing with. So the Access Suite that you announced a few years ago was your redeveloped product suite for your entire segment. Access Save was one part of that. Can you tell us a bit about how Access Save fits into that proposition for the low-end customer?
So for us, the Access Suite of products was actually developed for this low-end segment, and it included your basic transactional account. We had an unsecured lending type offering, and we also had housing finance offering. Then as part of the participation within the GAFIS project, we actually focused on the savings account, which we called Access Save. For us, the objective was to get to be as clear, as simple, and as cost-effective as possible. Within that, we actually developed a 7-day notice product. That's the Access Save. So the main drive for the 7 days was actually to ensure that we instill the savings discipline, so that we can actually lock in a bit of liquidity in terms of the customer to say, keep the money within the account for a bit longer. And also what we did is we got these accounts to be free of charge, actually, in terms of monthly management, as opposed to my colleague here. And the take-up has been amazing.
What are the numbers so far?
So far we've got around 700,000 accounts sitting on this book. The average balance per account is over $100 per customer.
And is that in line with what you expected when you launched Access Save?
In fact, this was a surprise to us, because this performed better than what we had in the past in terms of this kind of segment. And I think we also adopted similar views in terms of channel, like the sales agents, and we also used the retailer type agents in terms of little retail shops within the townships, where we facilitated deposits and cash withdrawals. The deposits actually made it easy for the customers to deposit for the savings. So that actually made it quite attractive for them to do it at any time within their convenience.
Interesting. I think that theme of the agents, the retailers and so on, is a common theme which we'll come back to, I think, in this discussion. But let me come to the last panelist to speak so far. John, you come from a country that's already featured on the program this week. It's known for mobile wallets primarily, and yet you as a bank, you've been there for longer. How do your accounts stack up as a proposition to customers alongside the stiff competition of mobile wallets that have become pervasive in Kenya?
Thank you, David, and thanks to the organizers of Sibos for inviting us to this event. It's a real honor. It's also quite daunting, especially when they told me yesterday that the next person to sit in the seat will be Bill Gates. So a little bit nervous to follow, or that he's following in my footsteps, or the other way around. Just a brief background on Equity Bank, because most of you probably don't know who we are. We now are the biggest bank in Kenya by customer numbers, as David said. We're also the second most valuable company on the Nairobi Stock Exchange. We've gone from being bank number 66, where we were a bankrupt building society 20 years ago, to being the biggest and most profitable bank in Kenya. So it's quite a success story.
And it's based on retail, John, right? You're entirely a retail-focused bank.
Completely retail-focused bank. Obviously, Kenya's been in the news as far as mobile money is concerned, and we think that's a little bit overstated. Kenya's the poster child of this mobile money, but in our opinion, we should actually be the case study on how not to do mobile money. It really is not a sustainable model, and as we've seen, the M-Pesa model, although it's been successful in Kenya, it hasn't been replicated anywhere else in the world. So as a bank, we realized early on that the mobile channel was absolutely crucial, and access points were absolutely crucial.
So common with your colleagues here, it's a core part of the strategy.
It's a core part of the strategy, but so of our close to 8 million customers now, 3 million of those customers have registered for our mobile banking, but usage is very low. And the reason being is that most of our customers have to use the USSD channel to do banking because they don't have smartphones.
Just describe that briefly, John, for the sake of the audience that may not be using that in markets like this.
In most developed markets, obviously, everybody's going with apps and using the data channel. But in the developed world, where the majority of customers do not have smartphones, the only channel which is available for us as banks is USSD, the unstructured supplementary data channel, which the telcos just used for general communication before they realized banks could use it for banking. And what has happened in Kenya is Safaricom has overpriced that channel considerably, specifically to exclude banks from doing mobile banking. So it's a case of anti-competitive behavior. I control the channel, I'm offering financial services, so I'm going to stop you doing financial services over the mobile channel.
So how does a bank compete then in that space?
Yeah, well, I'm pleased to announce that as of Monday last week, we rolled out our own MVNO.
So you started your own mobile operator as your response?
Yeah, so we've had to start our own mobile operator, and so we went live on Monday and are signing up about 5,000 customers a day on that mobile channel. So that was our response to the competition in the market. And in our opinion, the regulators should have been more actively involved in creating a level playing field, similar to what they've done in India, where they've just put in regulation to make open access to the USSD channel.
Right. Well, I'd like to, in a moment, pick up on this question. You're not the only bank on the panel that owns an MVNO, and that's an interesting phenomenon in the developing world. Two of the banks here, Bancolombia, also owns a mobile virtual network operator. Just before that, John, so with an MVNO, are you confident that your product suite is competitive against M-Pesa and other mobile wallet schemes?
David, it's all about accessibility. And as a bank, we realized that 150 branches was what we had in Kenya was not enough. So we aggressively lobbied the government to allow us to do agent banking. And so in 2009, we got permission to roll out banking agents. And we started rolling out aggressively in 2011. So in 3 years, we've now turned the agent channel into our most dominant channel. So according to our predictions, by December, we will be doing more transactions through our agents than we will be doing through our branches and our ATMs put together. So
this is your core channel going forward.
So that's what was the success of M-Pesa, was creating cash in and cash out points. So we had to be able to compete on that.
Right.
We've now got 15,000 cash in and cash out points, which adequately covers Kenya.
That's a massive number, and obviously as part of the numbers referred to on the video, where you now have, what, 100 times more agents than you have branches in Kenya today.
Yeah.
It's very striking. But let's pick up, so this, one of the themes here, all of you rely on mobile to reach these customers. Customers are not yet transacting as much as you would like on that channel for banking purposes, and yet throughout the GAFIS discussions, all of you have in different ways struggled with how to make that mobile channel work. So Bancolombia, Santiago, why did you buy a mobile virtual network operator as well?
Well, we are a very different country from Kenya, but our histories are alike. A few months before the launch of our product, the dominant telco in our country increased the costs for the bank sixfold.
Sixfold?
600%.
So that had an effect on your business model for the product?
Oh, yes, yes. I'm not going to tell you the name of the company, but the only clue is that it belongs to the richest person in the world. Okay?
And he's not the one sitting in John's seat later this afternoon?
No, he's richer even. but so we were scared because it affected the business model.
Yes.
And we went to the government, to the regulators, to the price control authority. Now we are about to win that round. Well, I say not to win, but because this is not about losers and winners. But I think we can reach a comfortable agreement. But we decided not to be so vulnerable. So we decided to buy a mobile operator.
So it's your insurance strategy.
We are still working with the existing big telcos, but we are using our new company especially to package a product for communities with for a lot of things. And also, let's say, as a deterrent, just in case.
Right, interesting. So 2 markets with very dominant telcos and with challenges working with pricing and so on in that channel. What about the markets like India and South Africa where you don't have the same dominance of telcos? What's been the experience, for example, ICICI?
David, the way I look at it is we need to break it into 2 parts. Okay, first part is mobile platform. And the second part is the service provider. If you look at for the financial inclusion business, mobile platform, is it important? It's very, very important. But building up a business model with the service provider always becomes a challenge. And what I have realized that there are 3 pillars for financial inclusion business. One is your process related to authentication, process related to identification of customers. The second is the technology. And third is the distribution network. Now, if 2 large companies needs to work together, both of them has to complement each other.
So you mean big telco, big bank?
Yes. So one has to be weak on any of the 3 parameters, of these 3 parameters, so that the other can supplement that or complement that. So that model becomes very, very difficult in a country where both the organizations are big. So I think I will agree with John that the model which is there in Kenya is one of its kind. It has not been replicated anywhere else as of now in that scale and magnitude.
Not in India yet?
Not yet. In India, we are still working on trying to build up that model. It's a long way to go. As of now, I think it's not as successful as Kenya. And I feel the reason is primarily because Indian banks are big, Indian telcos are also big. They have equal strengths on all the 3 parameters.
Right.
So it becomes very difficult to complement and supplement each other.
So how does Standard Bank manage? You're a big bank? You work with big telcos?
So just to comment on the wallet story. It was tried in South Africa to be replicated, and that was not successful. So they're trying to relaunch it now again with a different bank. We'll see how that pans out. But I actually don't see how that would work if we can still do the same as banks. So for us, we found that one of the things we did differently, David, was we actually decided to carry the cost of USSD on behalf of the clients. So it's actually saying to me, as a bank, we're carrying that cost in terms of the session costs, but the usage is still a bit low. So there's something else that's missing within that model to make sure that it actually becomes quite useful. The costs are actually coming down, and that's mainly pressure from the regulators to get the cost of that usage down. So for us, we're not too worried. We also do have a telco's license. If you wanted to switch into that, we can do that quite easily.
You could follow the same route if you chose to, but you haven't yet.
Not yet.
Okay.
Yeah.
Interesting. So it remains a core challenge of how big banks deal with big telcos, because the control of that communications channel really is a significant thing in accessing the customer going forward, and all the more at the low end, where a 6-fold increase in the cost of the channel clearly is painful for a low-end business model. What about the other type of channel, agents? So you mentioned small shops, Cabello.
Yeah.
Tell us just a bit about, do they sell product as well as provide cash in and cash out?
Yeah.
And what's been the experience with using agents to sell savings accounts?
So for us, it's been quite, that's actually one of the channels that we never had within the bank. We had to develop it from scratch. So what we had was, within the communities, we had small retailers where the community actually transacts daily. And we also had sales agents that helped in terms of opening those accounts using a mobile tablet platform. So it was actually less than 10 minutes to open the account, and it's immediately active. Within the small retailers, a customer can walk in there, deposit cash immediately. That reflects within your bank account immediately. So for us, that was the drive that actually allowed us to make it seamless for the customers to actually adopt and use it. So even now, that's actually one of our proudest achievements in terms of getting, because if you think about it, you're actually eliminating the cost of handling cash by using those small retailers, because I don't need to pay transit companies to transport the cash or anything. There's the cash in the retailer still, and it's actually cheaper.
So as a bank, you're willing to pay those agents some fee for taking the cash in, because it's still cheaper for you than the cash in transit and so on. So was that Bancolombia's experience as well?
Yes, well, it's a win-win relationship, because we use our main cost is handling cash. We say that cash is the enemy. A lot of the infrastructure of banks had to do with cash. And here we are using their cash, the cash of the agents. So we lower our costs a lot. But as they have the cash anyhow, so it is good for them. And also because they get traffic. They say that normally we have the average store, which is an agent of our bank, increases their sales between 15 and 30%.
Is that right? And you've documented
we have a student. We have documented it. So the agent is very good because of the lowering of cost. We can pay the agents a fraction that it will cost for us to do the same task in our branch, but for them it's marginal income and more traffic. And also, well, people, especially poor people, are afraid of banks. They look at us as if we are very complicated people, and we are very complicated, sometimes. And but they trust the general store in their neighborhood.
Right.
So they go there easier than they go to the banks.
But you mentioned a fraud problem you had earlier. Didn't you have a fraud problem with merchants or not?
No. So the fraud problem we had, it was people using our accounts to take the money out of other frauds, but that is another story. And also the agents give us reach, because they are in small towns, in rural areas, in neighborhoods we are difficult to reach in the big cities, things like that.
Well, Abhijit, the relationship model that you referred to earlier relies on agents, networks of agents. How do you see that as being scalable in India going forward?
David, already we are having around 16,000 agents.
16,000.
Okay, that if I work out branch ratios, it is 1:5. 1:5. It's 1:4.5.
That's similar to
our banks. Yes, it's
David,
similar to
banks. But David, if you look at it, the places which is covered by these agents, if I take the branch network, then it goes up as high as 1:12.
1:12, wow.
Yeah. So we already have a very high network of agents, and we find that that's one of the elements which can help you provide good customer service and at a cheaper cost. The reason of good customer service, as I was telling you, that it is important that the person, the agent, meets the customer on a very, very regular basis.
It's the high touch you were telling us about.
Yes. It is very difficult for you to manage it through the branch employees or through the branches or through a machine putting in there.
But how do you manage the quality then? So the high touch, I think we all get that at the high end and the very low end, ironically, of the market. But if they're not your people, how do you make sure the quality of that touch is sound?
Yeah, that's a big challenge, David. The way we try to work out is we have a very intense training module for them on trying to make them understand on how they have to build up the relationship with the customers. The second thing which also we do is we try to pick up the person who already have some existing relationship within that village.
I see.
So that gives a basic platform. So the selection of the agent is very, very critical.
So that sounds more like Santiago's story as well, about a trusted merchant who's already there.
Yeah, and then give them a coaching on a regular basis. So we also have a regular interaction with these agents to build up their capabilities and ability to advise to this set of customers.
Right. So John, you've scaled your channel massively, as you told us. It's your dominant channel, agents. How does Equity deal with quality issues? Have you had an issue with your customers encountering bad service experience with agents?
David, in effect, what an agent is, it's taking a teller out to the branch and putting them in the field. It's just outsourcing the teller functionality. And unlike a telco who controls their agents from centrally, we control our agents from the branch level. So we have very close interaction between our branches and our agents. So the agents report directly to a branch.
And that's the same for you, Satya, same for you, Abhijit, and the same for you, Kabela. Okay.
Yeah. So it's a very easy model to manage. Yes, you have problems like you're going to have anywhere else, but it's just taking a teller out of the branch and putting them in the field.
Right. So clearly your customers are voting with their feet, if this is new growth coming in through agents, that they're not being put off by negative experiences or so on going forward. How much more can you scale that model?
Our ultimate objective is obviously to get cash out of the system. So in effect, a cash in and a cash out agent is a necessary evil, which we would like to ultimately get out of the system, but we think we can give them more products going forward. So they'll be selling insurance and loans and money transfer and various other products in the future as soon as we can get away from handling cash. But at this stage, they're an incredibly efficient way of handling cash. Right. We've tried cash in ATMs, but then note quality is a huge problem in developing countries.
And trust from the customers.
And trust. So, I mean, you can hand over a very old note and the person can recognize it even if it's torn and broken. Right. So the agent model, in our opinion, is a great model for developing countries. And as a bank, we will roll it out aggressively. So we're just starting to roll out in Tanzania now, where we believe we'll push the ratio even further.
Than 1 to 100. This will be 1 to 100 plus.
Yeah, we certainly don't want to go more than 20 branches, 30 branches in the whole of Tanzania, which is a big country, and the rest will all be served via agents.
Right. So we're hearing a message that is that agents are here to stay in inclusive banking, but what they do may change, particularly as cash slowly, gradually, eventually reduces in the system. Santiago, you want to add?
I think we still have a long way to go with agents. We are just beginning. Mm-hmm. We envision agents are real franchises of the bank. Right. So we are a franchise, we are a trusted name. They are our people. Right. So we have to learn how to run a franchise, how to make quality controls, how to put them inside you. For instance, this year we had a convention for our best agents, and they were very happy, and they feel part of the bank. Uh-huh. So you can multiply and multiply. I think the possibilities are very, very, very big, and also the possibility of lower the cost of serving, and those could come with a savings account for the poor, which is also profitable for the bank. Agents are crucial.
Well, that's a good segue there, because I'd like to give the audience a heads up and say in a few minutes we'll also take some questions from you. So please be thinking whether there are things you'd like to ask the panelists here. But so this question of profitability, which you've mentioned, Abhijit's mentioned, it's an issue for all of these banks. You're all market-listed companies under big competitive pressure and investor pressure to deliver. So the business case for taking low-value savings. Abhijit, you said it's challenging. How are you going about making it work at ICICI?
The only way, David, to make it sustainable is by providing a large number of products to the single set of customers.
So cross-selling.
Cross-selling. If you look at standalone, a savings account business can never be profitable because of two reasons. It's a function of both the volume of money they keep as a savings and the time frame for which they keep the savings. Both are low in this set of customers. Right. So you don't make any money out of these savings accounts.
But you do it because you can cross-sell the relationship.
So the only way to make money or make this business profitable is by either by cross-selling of asset products and remittances or charging on the transactions. So if you make both the cost and the income variable, that every account is charged for the amount of transaction they are doing, and if you pay to your agent based on the transaction cost, transactions the customer is doing, then also you can make it profitable. And Apna Savings is a model which is on the second model, though we are now trying to build up more number of products. Today, if we look at, David, we have around 1.8 as a product to customers. So each customer is having around on an average, on 1.8 products. Right. So the objective is to take it up to a level of 2 to 2.5.
Okay. What's your number, Kabelo? So Standard Bank, what's the cross-sell ratio in the inclusive segment that you run?
Yeah, so for us, David, it's around, it's closer to the 1.8 as well, because for us, when you open a savings account, it's easy for us to give you a transactional account and an unsecured lending type product. And we also, the biggest penetration we have is on the insurance policy, which is the life product. So we cross-sell that at origination. So you don't need to go through any other process. As you open the account, you get it, yes.
At sale.
Yeah, so, and I actually agree exactly that you actually need to cross-sell multiple products to make this segment sustainable. So for us, we were getting quite close to that, but I guess within the economic environment in South Africa now, the unsecured lending type space has actually slowed down quite significantly. But for me, I still believe we're actually quite close to break even because of the cross-sell drive within the segment and lowering the cost.
So break even as a segment across the 7 million customers.
Yes.
It's break even. And you're measured the same way as any other business, division segment within Standard Bank.
Yeah.
Is that the same, Bancolombia? Do you measure the inclusive segment the same way as any other business?
Well, we measure the segment in itself. I mean, we have about 600,000 customers that belong to the segment, and we measure the profitability of every customer.
Every customer.
Every customer. Now the customer, the segment is profitable as a whole.
Right.
And it has the same standards than the other segments and the other projects of the bank. There are no subsidies here.
Right.
But sometimes it's very difficult to make it only with the customers. So we also measure the ecosystem. I mean, the companies which are paying these people.
So you take the fee at the customer in the inclusion side rather than the corporate payment side, for example, when you measure it.
For instance, in this account, in Ahorro a la Mano, the main fee comes from companies and government fees that we charge for them to pay these people.
Right.
And also for withdrawals. So we take into account all the ecosystem.
And so the inclusion segment carries some of the benefit of that revenue rather than it sitting with the wholesale unit. Is that what you're telling us? In terms of taking into account the ecosystem?
Yes, because that is important for companies and for government.
Sure.
So.
And if you didn't have the inclusion segment, those payments couldn't go into the account.
That's right.
Anyway.
That's right.
So part of it is about how you set your rules for revenue sharing in the bank, let alone cost sharing, it sounds like. And that's a big issue, right?
It's a big issue.
It's a big issue and a painful issue for many banks.
Yes. Sometimes between the two of us, we pay both sides.
Few others.
We pay both sides, just the corporate side and the retail side, so everybody's happy. Yes. And it's just accounting, it's not physical money, but it's good for all the business as a whole because they feel the business is good for us.
But the message we're hearing from the banks that are multi-segment, Bancolombia, Standard Bank, ICICI, is the segment can be profitable in time if the cross-sell increases.
Yes.
John, you're different. You're not a multi-segment bank, really, in the way you've been thinking. Does the business case work for you for taking savings as a bank? And then we'll go to the audience in a minute or two.
I think if we look at the model of equity over the last 20 years, we've at our very core of our DNA is inclusive banking, to open accounts for everybody. I think as banks, we've got a social responsibility to do it as much as looking at it about just making money. So fortunately, I'm very privileged to work for a bank that doesn't necessarily look at profit per customer, because if you look at profit per customer, as we've seen in this GAFIS program, it doesn't make sense per customer.
At the level of the customer.
At the level of the customer. But as a bank, we now bank in excess of 50% of the Kenyan population, which means every single large FMCG wants to work with us. Every player realizes that they need to work for us. So it's about the ecosystem. How do you play in the whole ecosystem, and how do you look at it from a broad perspective and make money out of the whole ecosystem? And that's been Equity's model. Yes, and if we do our job properly as banks, we should be taking customers who are poor and turning them into wealthy customers. And as a bank, we've now got more top-end customers than one of the big international banks, which has been focusing on that segment for a very long time, because we've grown them. So yes, the model does work. You do take poor people, they do become rich people, they do become good customers. So I think you have to look at it holistically. If you look at on an account basis, and even sometimes on a segment basis, it doesn't make sense. But as a bank, we've managed to raise a lot of low-cost deposits. So our cost of funds is incredibly low. And that has contributed to the profitability of the whole segment. So I think as a bank, we've looked at it holistically rather than breaking it down.
Into bits. Well, let's now go to the audience to give the opportunity we said we would give. So I think they'll turn the house lights up. And then if you have a question, please raise your hand, and you'll be given a mic and a baton, and then we'll take maybe a couple of questions, excuse me, 2 or 3 questions at a time, and then allow panelists to respond. So if you could please just be brief and just ask one question, because we'd like to give a couple of people, I do see some hands here, an opportunity. So that gentleman there first, please.
I'm B.K. Shrivastava from Corporation Bank, India. Regarding the profitability associated with the no-frills savings bank account, observation of the panel is that it is a social responsibility. I may not agree personally. It is a commercial proposition, because unless and until the people in the environment in which banks operate, they don't become rich, how we can expect ourselves to grow? It may be a mid-term or long-term strategy, business strategy, so that all those people are provided with some sort of entrepreneurial credit or credit for their agriculture, so that they become rich, and on becoming, they're becoming rich, we can expect ourselves to grow. It is not a social responsibility. It should be a commercial, strategy for all the banks throughout the country. The topic of discussion is big banks and small savers. So all those big banks must think in those terms, that small savers are going to provide growth to the big banks. Thank you, sir.
Thank you. Well, I'll let our panelists respond in a little moment once we've taken a few more. But let me be clear, I haven't heard any of them saying it's only social responsibility. I've heard them say these are business units which get measured over time, and it might be over time. It takes time to get there. But let's let them respond in a moment. So let's take a question number 3 there, and then we'll come back to number 2.
Yeah. So financial inclusion, this is A.K. Jain from Union Bank of India. There is a need of financial inclusion, and the response is also very good and encouraging. The question to panel is that question of sustainability, how the real challenge is to keep these accounts active. So what is the suggestion or view of panel on this?
How to keep low-end accounts active over time. Thank you. We will definitely respond to that. Let's go back to number 2 there? Yeah. The third question.
I am Sundar from Corporation Bank, India again. In fact, we have been talking of the small customers, and then what are the challenges that we banks face in providing the basic services to small customers. But I feel there is one more side of the coin. See, providing services from the bank's angle is one thing. The other thing is, how do we incentivize and then how do we entice the customers to feel that, yes, I have to avail these services. unless the need is felt by the customers, small customers, I don't think we'll feel these schemes viable. I think that is the main challenge.
Yes, thank you. So this question of incentivizing customers is something we want to put back to the panel. Let's talk about this. And clearly, India, there's a lot of interest right now because the questions are very pressing. If you're rolling out 100 million bank accounts in the next 4 months, they raise questions of commercial sustainability, customer incentives, activity rate, because if it ends up being 30% or lower, that's going to be a problem going forward. So Abhijit, do you want to start with a response? But it's not just about India. I think it's much broader about activity and so on, and incentives.
David, just to cover all the 3 points. I think nowhere we were thinking that financial inclusion business is a social responsibility. And I personally believe that if a business model is not sustainable of its own, it cannot continue. It has to have a natural death. So it is required that we make financial inclusion business, if not profitable, at least self-sustainable. And to do that, it is very, very critical, as one of our audience has mentioned, that more number of products, how we can sell. It is not going to be easy. It is not going to be easy basically because you need to have a lot of screening. You need to understand the exact demand of the customers, what they require as a product, and then cross-sell. So honestly speaking, David, for last 3-4 years, we have been struggling to make this business self-sustainable. As of now, it is not self-sustainable, but over a period of time, we should be able to make it self-sustainable.
Not 4 months, though.
No, not in 4 months. It's not possible to do it in maybe 2 years' time also.
Yes.
Okay? But, if you look at today, the change in our thought processes, we have now started measuring this business from the perspective of what percentage of my cost is getting covered with the income.
Right.
Okay, that needs to move to how much profit I am making. So,
right.
So that is one. The second is on making these accounts active. I think we have been discussing. There are various methods which we have tried. And one of the best method we have realized is a relationship-based model.
So the high touch you were telling us about earlier.
Very high touch, where the customer is met every week. He is explained the benefit of a savings account, having savings, and he's also given understanding of how to operate savings account, organize savings account.
Right.
We need to also understand that this set of customers, do they do savings? They do savings. Do they have a knowledge of savings? They have a knowledge of savings.
It's not on the bank.
But not on the bank. So to bring them onto the bank, we need to give them that kind of a comfort that it's so easy to operate. You can easily operate. You have easy accessibility. You can see your money at any point of time you want to.
Yes.
So if you can establish those confidence, you will see they are transacting. And Apna Savings is one of the example of that.
Well, I want to go to Santiago to respond, but ask you this, Santiago. Abhijit's mentioned high touch as a consistently important response to the question about customer incentives and so on. Now, in India, maybe that can work with a relationship model with relatively low labor costs. Colombia is not cheap labor costs, relatively speaking. So you've experimented with other types of high touch involving SMS messaging. Is that something you could talk a bit about as a response to the second or third question, and then any of the other questions?
But excuse me, but I want to try to respond first to the first gentleman.
About the business case.
About the business case, and say, look, this is a business, and we have a responsibility to our shareholders. And in our case, we are a large bank. And the market share we have in most segments is quite big. It's very difficult to increase that market share. So for us, financial inclusion is a must. It's a strategic necessity because we have to go to the base of the pyramid, to go to other markets, and it's a necessity. But having said so, if the business case is okay, it's good to have also a social case. So we speak in our bank, we say in Spanish, el buen banco bueno, which means the good bank. Good in the economic and in the ethic sense. But you can't be good in the ethic sense if you are not good as a bank in the economic sense.
Okay. Let's take another couple of questions, and we can always go back to these general themes, these themes of how do you get more activation, business case. I think you've heard a strong response from the panel here, which is there has to be a business case, but careful at which level you define that. Because if you set it at the product level, or maybe even the customer level, it may be tough to sustain. But they all seem pretty convinced that at the segment level, over time, the case is strong. It's for growth. Yes. It can, over time, earn revenue and so on. Let's go to number 3 there, and I see other hands. I think it's hard to see, but another hand there, if we can get a paddle or a mic. So number 3, yep.
I'm Ben Elman from Juntos, and one thing that I'm interested in is, as an industry, as we innovate, customers are being driven, whether through agents or digital channels, to increasing distance between the bank and the customer. How do all of you think about maintaining a relationship with your customers even as they're further and further away from the branch?
On the digital channels?
Yeah.
Okay, great question. Let's come to that in a moment. There was another hand I saw. Yes, please.
Yeah, Omar from Electronic Banking Services Company. 2 questions. One, why you are building your own agent network instead of utilizing the existing agent network that belongs to the telco, where they are familiar with the customer, they are selling telco accounts, and they are selling also airtime. The second question, what do you think need to be done to bring the regulators to move with the same base you are moving with, instead of becoming an obstacle to those experiences?
Thank you. So those are some big and interesting questions. Is there a last question? I see there was another hand that popped up but then disappeared. Okay, if not, so John, can you tackle maybe first the agent question, then we can go back to the question about in the digital environment, how you preserve this touch. But agents, why don't you just use M-Pesa's agents?
As a bank, we have spent a long time in trying to negotiate deals with telcos. And as some in the audience may be aware, we rolled out a product with Safaricom back 4 years ago called M-Kesho, which was a product that was linked between the bank and the mobile wallet. Unfortunately, and I think Gabello will give the similar results, the telcos very soon realized that they were actually competing with retail banks. So in our case, Safaricom has now partnered with a corporate bank. In the case of M-Pesa in South Africa, they started off partnering with Nedbank, which is a retail bank. They've now gone with Mercantile Bank, which is a corporate bank.
And a small bank, to Abhijit's point about large with small.
Very small banks. Telcos in the financial services space are our competitors. And as a bank, we've learned that the hard way. It's who owns the customer. If your customer's contact is with the Safaricom and M-Pesa's agent, Safaricom and M-Pesa owns that customer. And one day they will wake up and they'll be getting all their financial services from the telco. So we learned the hard way that we had to do it ourselves. We didn't want to do it. We didn't want to. Rolling out an agent network's hard work, but as you've heard from all the banks on this panel, we all believe it's a crucial part to own your own agent network. It can be a shared agent network, but you actually have to own the relationship with the customer. Secondly, as far as rolling out an MVNO, we certainly didn't want to do this because we wanted to become a telco. We did it because we had to do it. Because if we didn't do it, we would actually end up losing our customer. It started off with P2P, it went to bill payment, it then went to savings, it then went to loans. Safaricom and M-Pesa became a bank and are now a competitor. So it's a very difficult thing to partner, and I haven't seen any successful models worldwide of a long-term partnership that lasts between a telco and a bank. As far as financial service. As far as sustainability, I think it's coming up a lot. Equity bank is a point in case. Inclusive banking is sustainable, it is profitable, but it's not a short-term game. This is a long-term game, and you have to be in it for the long run. And as a bank, we've realized that we were meant to be a good inclusive bank. We feel we haven't even half scratched the surface. We think there's still a long way to go. Bottom line, there's still 2 billion people in the world who are unbanked. we've been doing something wrong up until now as banks, that we haven't banked them. And if there was a commercial model to bank those unbanked, we probably would have done it already. But the economics of banking the unbanked is still very questionable. And that's what we're debating as a bank. But we feel it's imperative that we do it, and we know long run the model works. We certainly don't think that this is all corporate social responsibility, not at all. But you have to think of it that initially you're not going to make money about going more down market.
So Kabelo, in your case on the agents and on the digital, maybe you can also pick up that question about maintaining the digital touch, how you do that at Standard Bank.
Can I just start commenting on the sustainability point? Because in South Africa, we've got a great example of a small bank that just came in and actually focused on this segment. And now they're actually doing quite well. Capitec, they've outperformed the big banks for the past 4 years by purely focusing on this segment.
And this is a 10-year-old startup.
Yeah, it's a 10-year-old bank.
That's disrupted the low end of the market.
It changed the way we actually did all the pricing. And they're still continuing the momentum. And they're using basic, simple products to just serve this market. And they've done well. So in terms of commercial sustainability, I actually believe we can do it. John did speak about ecosystems, and for us, that's one of the things we're actually focusing on quite heavily right now. We've got a lot of big corporates. They're the same customers we're talking about in the low-income segment. It's actually the same customers that buy from these big corporates. And we see a lot of value in making sure that we make that ecosystem to interact quite seamlessly. And that's where actually we see a lot of value. So we're focusing on that. In terms of the high-touch model as you go in, or the customer service type interaction as you go into the digital space, I actually feel that I think you'll see as we go right now the way that the world is evolving. Actually, every time you go to bed and every time you wake up, the first thing you see is your phone. And for us, we need to be in that space where we actually are there every time when you're thinking about doing anything. So banking is not about going to a bank anymore. It's about your everyday life. So for us, we just need to be there and make sure that where the customer is at all points. And mobile will enable that.
What about the question about regulators and how you can work better with regulators to accelerate, if I understood it right, accelerate the results that you're getting? So Abhijit, you must be working with regulators.
Just to add to what Kabelo was talking about, this relationship-based model and the digital versus the digital. I think the relationship, we need to go into the fundamental on why we are talking about a high-touch relationship today. There are two reasons. One is we need to build up the awareness among the customers on how the savings accounts works, how the organized savings works. And the second is they require a lot of planning for the future. So in the digital channel, if we can build up these two very strongly, then we can actually manage this whole financial inclusion business without the high touch. So we need to build up modules where I can train or I can build up awareness of these customers digitally, and also I can help them plan their future income. I think that's very, very critical.
That's the future. It has to be the future for your banks. What about the regulator question? So how can you work better with regulators to accelerate getting these outcomes that everyone's looking for?
David, I think in India, at least, we have been working very closely with the regulators. And it has been quite supportive. The regulators have been quite supportive on trying to work out a model such that it's a win-win for the customers and the banks. Okay. There are challenges related to using telcos and using telcos as a banking channel. So the regulators have been debating and discussing on how it can be used. So the concept is very clear that as long as the telcos gives the platform, mobile platform for doing banking, it's perfectly okay. Right. But if the telco wants to become a bank, that's a challenge.
We're nearing the end of the time for this session. And as we do that, I want to ask, excuse me, each of the panelists just to reflect back. So we've been on this journey, the GAFIS journey. You've had other things going on in your complex environments. But if you were to pass on to this audience the one critical success factor for success in the inclusive market going forward, what would that be? That would be a good thought to leave people with to think about, given what's happening later on today. So Santiago, let's start with you.
Maybe two.
Two.
Maybe two for the bank and one for myself. Humility and discipline. Humility because we went to the customer, to the people, to ask what they wanted. And we found a lot of different things that we previously thought. So it's very important to be humble and to go there. And discipline because the GAFIS project gave us the discipline to work in a very complex project, long project, 3 years, and that was very, very good for the bank. But also for me as a person, I learned a lot. I have been with the bank for 32 years, so I am sort of a fixed asset.
You're a veteran.
Badly depreciated. And to confirm at this stage of my career that we banks can improve other people's lives, that is priceless.
Thank you. John, what about you?
Yeah, thanks, Dan. I think I can echo what Santiago said. This has been a journey, and a very interesting journey. As a bank, we thought we really understood poor people, and we're known worldwide as the bank that was doing financial inclusion. Part of the journey, we did what was called financial diaries, where we went and mapped every single transaction that poor families did for a whole year. We've got close to 500,000 transactions that we've mapped. And what we really learned from that is how little we do understand our customers. We think it's all about financial literacy. Well, you know, from what we've learned, if our customers can live on $3 a day, they're probably more financially astute than everybody sitting in this room. Because if you can feed your kid, send them to school, and have a house, and you're doing that on $3 a day, you're financially very astute. So it has been, like for Santiago, it's been a life-changing journey to actually realize how poor the poor are. And so some of the comments you heard coming from me were very much about that. We've only started the journey. We've got a very long way to go. But it's a journey we have to tread, because if we don't take that journey, I think we're creating ourselves a time bomb where we're going to have a lot of people who are excluded from the financial system, and we can only begin to think what that's ultimately going to mean. So I think this is a journey we all have to take, and it's something we really have to take seriously. And as a bank, we are seeing how we can go that extra mile now to really bank the unbanked.
Thank you, John. Abhijit?
Yeah. In order to make financial inclusion a successful model, I think we would require to provide access to technology, to education, to knowledge, and to the economic systems for this set of customers. And that can be best done, David, through a relationship-based model. There are 3 pillars for financial inclusion, and I call it 3 A's. Accessibility, acceptability, and awareness. So one needs to work on all these 3 to make it a successful model.
Great. Thank you, Abhijit. Kabela?
Okay, thanks, David. I think for us, after going through this journey and learning a lot more around the customer behaviors, what came out quite clear is that actually this customer behaviors changed quite rapidly as well. So innovation plays a big part in getting this right, actually. So we can't resolve this problem using legacy infrastructure. We need to look at new ways of doing this. And for me, that gets into lowering the cost to serve this market and coming up with customer-driven products that actually are much simpler and straight to the point. So for me, it's design from a customer's perspective and make it as low cost as possible.
So in the words of Nelson Mandela, maybe appropriately, Kabela, coming from you, it's a long walk to financial inclusion, but it's a walk that you banks have started. You're on the journey. It's a business walk. And I think what's impressed us is the way the conversation has moved beyond CSR into business process, business questions, business networks, business models that have changed substantially. So please join me at the end of this in thanking the panelists for their view. We appreciate all of you and the journey you've been on. Wish you well going forward. Thank you. And just to mention, if you would like to continue the discussion around financial inclusion, there are 2 more events today as part of SIBOS at 12:30, starting shortly. Kennedy School Professor Jay Rosengard will be speaking downstairs in the exhibition level in the SWIFT studio on what is financial inclusion. And then back in this room, in fact, in John's chairs, he pointed out, at 4 o'clock, Bill Gates himself will be here and will be able to talk to you about the vision of his foundation, one part of which has been supporting the work with these banks over the past 3 or 4 years. So with that, thank you very much. Enjoy the rest of the discussion.